Okay, we're now going to look at allowance for doubtful debts or provision for doubtful debts, which is a contra asset. Unlike bad debts, here, because remember, colleagues, every time you make a credit sale, you are not guaranteed that you're going to get all your money. Okay, some people might not pay you, so that's why we're bringing in this provision here to say that we might not receive all the money from the people who are owing us. Okay, this falls under the prudence concept. The prudence concept, as an accountant, you have to be honest, disciplined, and also if you can see future costs or future losses, take care of them also. So even here, realistically, if you're a business, you know all your credit sales are not going to get all the money. So you just have to say, okay, you make an estimation of the money that you might not get. Okay. Yes. So provision for doubtful debts, you have two scenarios. Okay, the first scenario is where you have an increase in the provision, meaning you already have an estimated amount which you expect not to receive. But then this amount that you're expecting not to receive has now increased, meaning you're estimating the money that you might not get from people has increased. All right. So, an increase in a provision for doubtful debts, usually you treat it like an expense. Why? Because you're estimating that you might not get more money back. Okay, so it's treated like an expense. So, this is how it is done. You'll be given your trial balance. They'll tell you trade receivables 48,000. They'll give you provision for doubtful debts, they'll give you 4,000. So here in the trial balance, we estimated that we might not get 4,000 from the people that are owing us. Okay. Then they tell you additional information here. They say provision for doubtful debts is 10% of trader receivables. Okay. So when they tell you that in the additional information, the first thing you need to do is you need to calculate this new provision. The reason why this balance is changing is because the value of the trade receivables, it's not always constant. Also, it changes. Okay, during the year, your trade receivables balance also be changing. So your provision at the beginning of the year and your provision at the end of the year are going to be different because your trade receivables balance is constantly fluctuating. So the first thing that you do is you first calculate the new provision. Okay, I've told you provision is just the rate times the trade receivables. Okay, the rate that are given multiplied by the trade receivables. Okay, so the new provision, we're going to get 10% of the existing trade receivables. Okay, so 10% of 48,000, you get 4,800. This is the new provision for doubtful debts. Okay, so once you get the new provision, you compare it against the previous one to see has there been an increase or there been a decrease. So the old provision was 4,000. Now the new provision is 4,800. Okay, so it means that we have an increase here. Okay, at first, at the beginning of the year, we estimated not to get 4,000. At the end of the year, we're estimating not to get 4,800. It means there's been an increase in our provision. Okay, so you're going to say 4,800 minus 4,000, going to get 800 kwacha. So this provision has increased by 800 kwacha. Okay, so this is going to be the general entries for this provision for doubtful debts. Okay, you're going to debit the statement of profit or loss. Okay, you're going to say increase in provision for doubtful debts. Okay, you're going to label it increase in provision for doubtful debts. 800 kwacha. Okay. Then you're going to credit the provision for doubtful debts. Remember, provision for doubtful debts is a contra asset account. Okay. So in our trial balance, PD is just provision for doubtful debts. Doubtful debts. Before doubtful. Uh, Earlier on, we had a balance of 4,000. Okay. That's what we estimated that we might not get. Now it's increased by 800. So it means the new provision is 4,800. Okay. So this credit entry here, where you say credit provision for doubtful debts, 800, this is what has been put here. Okay. This is that. This is the credit entry that has been put here. Your credit provision for doubtful debts, 800. Okay. As I said, this journal entry, you're not going to need to show it, but you need to know what's happening. Okay. Then, this is where you need to pay close attention. In the statement of profit or loss, under expenses, you're going to put increase in provision for doubtful debts, 800 kwacha. Okay, 800 kwacha. Then in the balance sheet, okay, because since you're estimating you might not get this money, so you also need to deduct it from the trade receivables. Okay, because you can't stay in the trade receivables balance if you're estimating that you might not get it. So you're going to subtract the whole amount. Don't just subtract 800 kwacha. No, the whole 4,800. You're going to subtract it in the balance sheet from the trade receivables. Okay, so 48,000 minus 4,800, you get 43,200. Okay, so that is your new trade receivables balance. Okay, yes. Are there any questions? So please don't make the mistake in the balance sheet. You've got here 800, then in the balance sheet also you're just subtracting an 800. No, subtract the new amount. Scenario 2, where we have a decrease in the provision for doubtful debts. All right. You'll be given your trial balance. They tell you trade receivables, 48,000. Provision for doubtful debts, 5,000 kwacha. Then they tell you additional information. Provision for doubtful debts is 10% of trader receivables. So when there's a decrease, it means you might get some money back. Okay? You might get some money back. So it's treated like income. Okay? Because you're saying you might get some money back from the people who are owing you. That's what a decrease in this provision is saying. Okay? So again, the first thing you do, colleagues, you calculate the new provision. First thing. The new provision, 10% of the trade receivables, 10% of 48,000, 4,800. Okay. So at the beginning of the year, you thought you might not get 5,000 from the people who are owing you. But at the end of the year, this balance has reduced to 4,800. So there is a decrease. Decrease of how much? 200 kwacha. So what we're basically saying, we might get this 200 kwacha back. Okay. We might get this 200 kwacha. Okay. So the double entry again. This time you're going to debit provision for doubtful debts. Remember, provision for doubtful debts is a contra asset. Provision for doubtful debts. Okay, it's a contra asset account. Okay, so earlier on we had a balance of 5,000. Then it has decreased by 200. Okay, this provision has decreased by 200. So you need to debit this account 200, this decrease. So that your new balance is going to be 5,000 minus 2,000, 4,800. This is the new balance of the provision for doubtful debts. Then you're going to credit, okay, the income statement. You're going to say decrease in provision for doubtful debts. In the income statement, after you get gross profit and you say add additional income or add other income, you're going to say decrease in provision for doubtful debts, PDD. Okay, decrease in provision for doubtful debts, you credit 200. Remember, according to the double entry rules, income revenue increases with credit. Okay. So on the statement of profit or loss, after you get your gross profit, then you say add income. You're going to say decrease in provision for doubtful debts, 200 kwacha. Okay, this credit entry is representing this in the financial statement. Okay, that is an income to be added to your gross profit. All right. Then in the balance sheet, okay, as I said, you are always going to subtract the new provision that you got, this 4,800, this provision that you calculated, which is basically here. Okay, you're going to subtract it from the trade receivables. Okay, so you're going to say 48,000 minus 4,800. Your new trade receivables is 43,200. Okay, 43,200. Okay, are there any questions so far? Yes. If there is no existing amount in the trial balance, okay, the trial balance, for example, this is the said scenario. Your trial balance doesn't have any existing amount, okay. So, for example, there's a trial balance here. You have trade receivables, T trade receivables here. Okay, you have trade receivables 48,000. And in the trial balance, there's no already existing amount. They just tell you in additional information. They just tell you provision for doubtful debts is 10%. Provision for doubtful debts, PDD, is 10% of trade receivables. 10% of trade receivables. Okay, this is a situation where you don't have any provision in the trial balance. In such a case here, okay, what happens is you first calculate. Okay, you calculate. You're just going to say, okay, what's 10% of 48,000? 4,800. Okay. That's a new provision for doubtful debts, 4,800. All right. So here, since there's no increase or decrease, so what you're going to do, this is the general entry for this. Okay, debit, credit. All right. So here, you're just going to credit provision for doubtful debts. Oh, you debit the statement of profit or loss. Debit the statement of profit or loss, since this is like an expense here, 4,800. Okay. Then you credit provision for doubtful debts, PDD. provision for doubtful debts. You credit it 4,800. So that in your statement of profit or loss, okay, you're just going to put here provision for doubtful debts as an expense. Okay. So whenever you're calculating your first provision for doubtful debts, you just treat it as an expense because this is the money you're expecting you might not get. Okay. So you just put there 4,800. Okay. That's in the statement of profit or loss. Okay. Then on the balance sheet, your trade receivables is 48,000. TR trade receivables. Just going to say 48,000 minus 4,800. Okay. Trade receivables, you just say 48,000 minus 4,800, 43,200. Yeah. That will be on your trade receivables. So, but it's rare they'll give you a situation where there's no existing amount. Okay. Usually, you're going to always see an existing amount. But if you see you're in a situation where there's no existing amount and they've told you to calculate the new provision for doubtful debts, then just know whatever you've calculated, it will be treated as an expense in the statement of profit or loss. And then in the balance sheet, you're going to deduct that amount from the trade receivables. Yes.